In this project, we analyze the positive social and economic outcomes in highly capitalistic countries. The social and economic outcomes data was obtained from the World Bank and United Nations, while capitalism indicator data, as measured by the Freedom Index, was sourced from the Heritage Foundation. The index ranges from 1 to 100, with 100 being the highest score. It contains 12 indicators grouped into 4 categories, that is, rule of law, which contains property rights, government integrity, and judicial effectiveness. 2. Government size, which is composed of government spending, tax burden, and fiscal health. 3. Regulatory efficiency, that is, business freedom, labor freedom, and monetary freedom. And 4. Open markets, encompassing trade freedom, investment freedom, and financial freedom. Countries with Freedom Index greater than or equal to 70 were classified as highly capitalistic. The data covers the period from 1995 to 2022, and the number of countries covered ranges from 80 in 1995 to 154 in 2021. Let's now dive into some positive social and economic outcomes in highly capitalistic countries. First, capitalism leads to higher economic growth and development. This is as a result of efficient resource allocation, encouraging entrepreneurship, incentivizing innovation and physical and human investment, dynamism, and enhanced productivity and technological progress. Figure 1 reveals that GDP per person in constant 2015 USD is higher and has been rising in highly capitalistic countries, but it is lower and has almost stagnated in less capitalistic ones. Figure 2 also reveals larger labor productivity as measured by income or output per person in 2021 purchasing power parity in US dollars. Credit availability, as measured by domestic credit to GDP, is also greater in these countries, which boosts economic progress despite a decline of about 35 percentage points since the 2008 financial crisis. Their trade to GDP ratio is significantly high, implying a wider variety of affordable goods and services, higher consumer choices, and high e-commerce activity. Higher levels of international trade boost economic growth and development by expanding production, consumption, and investment opportunities. Second, by stimulating economic growth and development, capitalism lifts millions out of poverty and lowers income inequality. Figures 5 to 12 show that highly capitalistic countries have far lower poverty rates as measured by poverty gap or headcount ratio. The Gini index also trends lower, indicating lower income inequality. This is because capitalistic systems foster upward mobility, encourage investments and job creation, and redistribute wealth through taxation and social programs. Highly capitalistic countries have a friendlier business environment due to appropriate regulatory frameworks and policies. This enables enterprise formation, operation, and expansion. This is indicated by the larger ease of doing business score, higher new business registrations density, minimal tariff rates, both simple and weighted, lower profit taxes as a share of commercial profits, and higher tax revenue as a share of GDP or output. Free market economies incentivize competitiveness, creativity, and invention, which fosters higher innovation and technological progress. These systems reward ingenuity and creativity by granting investors temporary monopolies through patents and trademarks. Figures 20 to 24 indicate that such countries have greater values for patent applications by residents and non-residents per 1,000 people, research and development expenditure as measured by both the numbers of researchers per million and as a share of GDP, share of high technology exports in manufactured goods, and the number of people using internet. They have better human development outcomes in terms of life expectancy at birth, school enrollment rates, and human development index. The majority of capitalistic countries are wealthy and can afford to invest in quality education, healthcare, and other social programs, resulting in higher standards of living. They enjoy sound macroeconomic stability due to their strong institutions and transparent governance. They have lower inflation, interest rates, spreads, and unemployment. That is, they have lower unemployment. This conducive environment creates a more predictable and favorable environment for business and consumers to thrive, which can further promote investment, economic growth, and overall prosperity. In conclusion, highly capitalistic countries tend to have several advantageous economic and social outcomes, including higher economic growth and development, lower poverty and income inequality rates, a friendlier business environment, greater innovation and technological progress, better human development outcomes, and sound macroeconomic stability. Nevertheless, capitalism is not without its drawbacks. In our next project, entitled From Capitalism to Godrism, a proposal, we will explore these drawbacks in details and discuss Godrism, an alternative economic system that aims to address the shortcomings of capitalism. Until then, farewell.